All right, and welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts and analysis. Anyways, let's get it out of the way. Big story of the week, Silicon Valley Bank is no more. So you see SIVB there. Stock price cratered about 60 or 70% on Tuesday, and Friday it did not open. So that went bankrupt. Lots of regional banks here in hot water right now. And if you'll remember, if you guys have been watching every week here, this is something I talked about and talked about on my channel as well. Back in December, I said, you guys look at the regional banks here, KRE. This is a huge breakdown here in the middle of December, on December 5th to be exact here. You saw the same type of price action from the XLF as well. A little bit less weighted towards banks, more towards general financials. But either way, I saw the breakdown in financials relative to the spiders. So the spiders, the S&P was, holding up still. And we did have a nice little dump in late December before the rally here. But as you see, the regional banks here never really recovered. We had a little bit of a squeeze here, but we never even got close to new highs. And, this is stuff I've been warning about here. Don't ignore financials, especially in a bear market when they just break down out of nowhere. So smart money knew something about this. They knew something was going on here, and they started getting their money out, or they started shorting. Bottom line, though, financials were forecasting this. And, last week in the video, I said, guys, look, the market had a nice rally, about 140 points off the lows on the SPX. And you couldn't find a bear in sight last weekend. It was all, that's it. The bear market's over. We're going up to highs. And anybody who had a bear case was getting dunked on. And except for me, I said, listen, last week, this market's not, there is a trap door, and it's set to open this week. And sure enough, that happened. Now, I'm not going to sit here and say that I knew that SVB was going to fail. I can't say that. But, if you know how to read the charts, they tell you that there are problems out there. And you can see Friday here on the spiders, 189 million shares when it was all said and done. Serious volume here. That's higher than the October low. That's higher than the June CPI sell-off. And I believe that about the same. Yeah, so the Ukraine invasion and the bottom here before the FOMC in February were really the last two times we got volume that high. But either way, big move here, and we now have failed patterns here on the weekly time frame of the spiders, which we talked about we talked about that 2 weeks ago. So we closed below this inside bar. So guys, any rally here is probably going to get faded, and we had a huge breakdown this week. And you have a head and shoulders here. So there's your shoulder, head, and then right shoulder, and that should take you down into the 360, mid 360 zone. So did a little calculation on that, and it's right in the 360 area. Now, it's not going to go there in a straight line. We do have some support that we're coming into right now, right around 383, 385. You can see this area where we couldn't break out of previously in December. That should act as support, so we're kind of getting into it. We're a little oversold. Over the weekend, I expected them to kind of put some lipstick on the pig, and they kind of already did. If we take a look here, the Fed's now considering easing the terms of banks' access to discount window. Basically, it subsidizes the losses for lack of a better term. So I do think they're going to try and stem this a little bit here. The big problem, though, is that the Fed still wants the market lower. The Fed doesn't want panic, but the Fed does want the market lower. And inflation is still too high. So they can't really do anything to fully pivot anyway, even if they wanted to. But there's lots of problems out here, either way you look at it here. We are into some support. I do have some cyclical patterns coming up here. I do think we do continue to trade sideways to lower over the next week or so. It is possible we could put some type of a rally in probably later in the month. But right now, markets are under pressure, and we take a look, speaking of failed patterns, the one area I've been talking about on the triple Qs here is this yellow trend line, and that is that weekly green bar low there from the 30th, and that got closed below this week. They saved it the last 2 weeks, and this week it got closed below. So failed patterns here, and again, what that means is the next rally should be a lower high. But lots of problems here in the market. Very, very high volume. We do have options X this week. It is, I think, a triple witching, but if we have more panic, that will kind of take over. So I'm not sure how much market makers can really do if we have some type of panic, especially if there's more, contagion risk, obviously. But like I said, this stuff came out on a Friday. They're going to come out on the weekend. They're going to try and jawbone it a little bit. I would assume. Like I said, the Fed does want the market lower, but they don't want to crash. They don't want it to lose control, essentially. But either way, market's coming into another risk period here, as we talked about in the last couple of videos. And again, this market does have lower to go. Anyways, over to the Russell 2000. So again, bottom completely falling out of this one this week. So Thursday, total dump. I thought it had good support at 180, 181 for at least a bounce, and that got gapped below on Friday. We went all the way to 175. Lots of regional banks too in the IWM, so that does kind of make sense there. This should have some short-term support here. There's a lot of, that was your bear flag that turned into a breakout, so a failed bear flag. There should be money sitting there. Again, it's been a pivot point, 175 there on the Russell for a while, but either way you look at it, take a look at the volume there too. Heavy volume. And either way you look at it, again, another massive failed pattern there on the weekly time frame. So Russell under pressure, the Dow also coming down as well, and basically hit that all-time high trend line. Again, going back to the all-time high. So that's where we stalled out. By the way, I talked about this Friday, and I told you guys in this, I've been saying it for a while. Just because we break above an all-time high trend line doesn't mean that the bear market's over. You got through one level. There's many others, so it's not just you break one aesthetically looking trend line and that's it. It's all we go back to all-time highs. It's not how it works. So either way, but you see the spiders there closing back below that all-time high trend line there. So bear market back in full force, and we talked about that 2001 comparison. It's very much alive here. It's very, very comparable here. Again, we'll just roll that back really fast. So that whole year trend line right there, up move, bear pattern, we broke through it. Then we had kind of a bull flag type look. That failed, and that led to the biggest leg lower back in 2001. And I'm seeing a lot of parallels here. But anyways, before we get too sidetracked, let's get over to the semiconductors here. So SMH down 1.62% on Friday, still holding up. Again, you still have kind of a potential for a sloppy head and shoulders pattern here, but it's hanging in there on the weekly time frame. Again, we still have that green bar that we're holding, so that did not break, but I do think the highs are in, so any rally I think will probably result in a lower high. IGV over to cloud software, again, failed pattern here on the weekly again. So green bar, and that got closed below. Notice that little trend line there acting as resistance on the daily, and we had a nice dump there Thursday, Friday. So cloud also coming under pressure. Dow Transports here, that is still, believe it or not, had a nice dump again Thursday, Friday with everything else, but again on the weekly, it's still holding that green bar low at 14,139. Again, I still think the highs are in, so any rally will probably result in another lower high, and it's just a matter of time before this gets taken out. But again, the transports, they're hanging on by a thread. It did touch that 100-day moving average there. All right, let's shift gears here and get to bonds. So there's a lot to talk about here. So previously, the 2-year was not giving us any indication that the Fed was going to budge, and this was taken by me as, look, this is bearish. It's bearish tech because, the Fed's got more work to do. The Fed actually got behind the curve. The 2-year actually clipped 5% this week and closed above it on Wednesday. And then Thursday, Friday, obviously massive reversal. Now, why is this important? It could mean it's very possible now that the Fed is done hiking rates. Or I think probably at this next meeting, they'll probably do 25. And then I think they'll probably be done. There's just too much going on right now, especially with financial risk, financial contagion, for the Fed to be seen getting too aggressive right now. Remember, they want to, and I credit Jim Carson with this, they want to sell calls to the market. So they want to keep the market kind of afloat, but they want it to grind lower as well. They don't want panic. They're not just going to sit there and do nothing with banks failing, but at the same time, they're not going to completely do a 180. They might have to pause though. Now, again, going back to that 2001 chart, I'm not going to pull it up, but basically the top in 2001 is when the Fed pivoted and when they started cutting rates. So again, just so everybody's aware, just because they do that doesn't mean that the market's going to go back to all-time highs. What that means now, what this is telling us here, if this is anything other than just knee-jerk panic, I mean, you see the 30-year there as well, getting a huge bid up, 266 basis points in one session. That is monstrous move for the bond market, by the way, guys. But what this means potentially is that the recession is about to start. So that's why it's not necessarily bullish. In fact, it just means that, you know, we're that much closer to the recession. So that's what we're seeing from bonds right now. Again, could that get reversed? Yeah, it's possible. But I think that looks like a low to me. That looks like a reversal here. We pierced double bottom. That does look like a low. So again, we'll continue to watch it next week. Next week will be very important. See how the market trades. There's a 10-year, the 10-year note up 1.39%. Here's the 10-year yield. That's still holding up well. The trend is still nicely up here. Again, next week is going to be very important for bonds and for the whole market. You see the 30-year there as well, backing off. So anyways, let's get over to housing XHB. Again, another failed pattern there. So there's that green bar, and that's just another one down as far as I'm concerned. So again, lower highs are expected. And I told you guys back here that I thought the high was in and it was a blow off top. And so far that's been pretty much the exact high. So that's where we are with housing. Let's look at VNQ. Big breakdown here. It is into some support right there with this pivot low, but nice breakdown. And we talked about this last couple of weeks. Big bear base there on the weekly time frame. Speaking of bonds too, HYG, before I forget, again, not a good chart here on the monthly. So you see that monthly inside bar, and same thing there on the weekly monthly inside bar with a breakdown. So again, not a good look there for high yield debt. Anyways, over to XLF. Obviously, we touched on financials a little bit already. We do have a head and shoulder top that did play out to my target. So I said around 32.50. We could get a little bit more downside. Wouldn't rule that out. There's a gap right here at 32.19. So that could get hit this week. In fact, it wouldn't surprise me at all. Take a look at the broker dealers, XBD. This one's been stubbornly strong, and it just took 2 days to get through that rising wedge. So huge breakdown there in XBD. So look at some of these names here. Schwab. This is a haircut and a half right here. So you're talking about $76 as of the close on Wednesday, and then 58, sub 59 on Friday. Pretty big cut there. FRC, another regional, $120 down to 45. So big sell-offs here in some of these names, even the bigger banks, JPM. That did get a relief bid on Friday. I believe that is more pertaining to people taking their money out of smaller institutions and kind of going into the bigger names. I want to say Wells. Yeah, Wells was green as well. So some of these bigger banks did get a little bit more of a bounce here. Needless to say, though, major problems in the financial sector. All right, let's get over to energy here. So crude, again, hanging in there. Nothing's really changed. The thing I'm watching for here, though, if crude starts to break down and bonds continue to bid, then we're probably into the recessions. We're probably starting into the recession. So that's something to watch there. Again, on the upside, 82.72, nothing has changed on that front. XLE still holding up, although it did have a pretty weak candle on Friday. Maybe it's just because everything got hit on Friday. That's certainly possible. It held the 50-week moving average, but you're hovering at the lower end of this range here, and you're inside of that red bar. So if this starts to break down, you're going to that blue trend line there. That would be a good bounce area. For the XLE for XOP, this is starting to break down a little bit. So again, we talked about this white trend line, the lower highs now, it's losing momentum. So XOP, I think, has to go down and test 116, somewhere in that area, but definitely losing some momentum. And then the OIH, we talked about this the last 2 weeks. They saved that green bar low. They did not save it this week, so pretty good sell on OIH. This has to go to 280, maybe 275 here, right near that 50-week moving average. So pretty good dump there for oil services. Nat gas, again, doing its thing. I have this bottoming this week again. So again, we just went from complete fear, everybody calling for $1.50, to everybody calling for the lows. So I think we probably need to go out and fill this futures gap around 236, 237. It's not that far away here. After that, this will go up to $4. So nat gas holding up nicely, but it does still need to do a little bit more backing and filling. Uranium, CCJ also coming in as well. So again, that little daily bear flag started to play out here. It does have some support in this 25.50 area. So, it's holding up okay, but nice fade this week. URNM, again, we've been following this wedge pattern and had a pretty good sell. So this is going to need to get saved this week if it's going to, break up. But again, this range is getting really tight here. You could get a fake breakdown and then a push up. I can't rule that out either, but we'll need to see follow through on either side this week. And then GBC also coming in a little bit, but still, holding pattern here. Was actually green on Friday, so it's hanging in there okay. Some of these grains are getting hit really hard. Wheat, this is into a lot of support though, so, I do think it gets a bid here, but, some of these ag stocks or it's not ag stocks, but ag, I think soybean oil getting hit pretty hard. I think this wants to go down to 50. But anyways, before we get too sidetracked, so let's get to the dollar index, so DXY. This one backed off on Friday a little bit, and you might say, well, how could that happen with the market down as much as it was? The answer is just the 30-year was up. So, the 30-year bond itself, not the yield, obviously. And that just kind of put pressure on the dollar. That's really all it is. If the market starts to, if we have like a free fall, if we have a really bad volatility event, the dollar will rally, as a fear play. But right now, short term, it's just rates are coming down. So that's why the dollar backed off Friday. But it's still holding up, sort of up move, and you're still kind of going sideways. So the dollar still can get a bid. By the way, speaking of fear, I forgot to even mention it, but the VIX hit 29 here on Friday. So the VIX definitely woke up. You wiped out, this November high. So big move there on the VIX. And people have been wondering about the VIX here. Is the VIX broken? Is the VIX dead? Well, it woke back up on Friday. So anyways, let's get over to gold here. So GC, again, a little bit more of a fear trade. That did get a bid, obviously, with the dollar down, but also with bonds up. Gold got a bid, also some fear out there, obviously. I'm not sure where it wants to go. It does have some resistance up here. Could it get to 1900? I definitely can't rule that out. I still have precious metals making one more push lower here. Silver also a little bit on the weaker side. Remember, the industrial aspect of it does put pressure on it. So especially if the market is, taking a look at the 2-year again, if the market is trying to price in a recession, then silver is going to have a little bit harder of a time, at least at first. But I still think silver's got one more move down, and then we'll get into that as well. Platinum also holding up. Still have this one penciled in for one more move lower, but it's holding up, so we'll give it the benefit of the doubt for now. And then copper, little wedge pattern here on the daily. I think that's still got to go to 375, but you know what? It's hanging in there for now, so we'll leave it at that. Lastly, Bitcoin, again, dumping out pretty hard. Remember, Silvergate, obviously, also kind of in the mix with these banks here. So that putting pressure on crypto. We did go and test the 200 moving average on Friday, and we got a little bounce off that. However, yet again, another weekly green bar failure. So we closed below 21,368 on, this week. So that's not getting saved. And that kind of coincides with all those other failed patterns there for all these assets. So again, failed pattern on a daily and weekly of Bitcoin. So I am expecting this to go lower. If this goes sideways, it's setting up to break that 200. Your next area is down at sub 18. So you didn't really build any supports up here. It's just a short squeeze and no supports built. So it can go down just as fast as it went up here, but maybe a little short-term oversold is due for some backing and filling. So we'll leave it at that. But I would not look to be long here, crypto right now. Anyways, so back over to the spiders here. Again, I do think we have a little, we'll probably, Monday, I would say we probably, futures open in about an hour. I would say we probably gap down Monday. Maybe if we don't, we probably test lower prices. But then I would think that by Tuesday, Wednesday, we could probably bounce. Unless we get any sort of extra, if things get worse news-wise, then, you could trade down, possibly even into later in the week. But I think we probably get a short-term relief bounce. I do have us going lower, though, really kind of into the latter part of the month, though, for right now. Again, that could change this week. This will be an important week. FOMC coming up. CPI, I believe, is on Tuesday. Options X. There's a lot going on this week. It's going to be very turbulent, very interesting to watch, especially keep your eye on the 2-year. If that keeps rallying, and the yield curves start to come back in, it's telling us that the recession is here. So some things to keep an eye on here going into this week. But anyways, guys, gonna wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I will talk to you guys all next week.